Put it on the computer. Awesome. All right. So welcome back. Glad to see y'all have been fairly active today in the trading and this week in general. So before I start, I want to ask if you have any questions or anything that you want me to go over.
Jacob, do you swing trade?
I used to swing trade a lot. I currently am not swing trading. It's way too volatile of a market. I'm currently about to move, leaving a position in my job. So I don't have really that much focus. Like I might be able to catch the market 2 or 3 times a week currently. No swing
Gotcha.
trading. You don't really need to look at the markets. But with me not being able to see it at least a day, yes, I trust the fibs and my stop losses and all of that. But if I can't physically open up or don't feel comfortable opening up my phone for at least 10-30 minutes on the chart or whatnot, then it just gives me too much anxiety.
Gotcha. Makes sense.
So yeah, and like I said, I'm doing my best trying to continue practicing risk management and everything, and seems to be working out so far. So but yeah, hopefully I'll get back to there if the market when the market starts to correct itself,
Gotcha.
and that's when it's fun. This is definitely anxiety induced, and it is fun obviously, but
It's
kind of
tiring.
stress. Yeah, it's tiring, stressing out over 5-minute candles and everything.
Right.
It's just like, should I take profit? Do I take profit? When is it going to go up? So yeah, that's a good question. I do not. I saw Elijah swinging earnings report, which is its own anxiety riddled
Yeah.
lottery, YOLO, what have you. But Netflix actually was a really good one. I was looking into swinging that. I just wasn't able to pay attention, and then obviously it was up 20 or 30 points since last week. So it's just like, this is already up. Is it still going to continue rising?
Yeah. So I don't know if it's because of the market or not, but what I noticed is that the candle, there'll be some pretty big movement, and big is subjective, but the contracts aren't moving. It doesn't seem like.
Right. So that's the thing with when you have uh earnings, the premiums are outrageous. So even though Netflix went up what, 20 or so dollars today,
Mm-hmm.
it was only a 40% trade. Where if you're trading that throughout the day as a day trade, the $20 moves easily 100 plus 200% move, right?
Right. Oh, yeah. Okay. I was just trying to understand that.
So so if you got into that contract on Monday or even last week, obviously it would have been you would have got the entire delta move from that, but you would have seen an increase in your cost. Let's say you got in and then maybe yesterday around 2 o'clock, let's just bring up the chart. Um, and that's around 2 o'clock, you see a huge volume, whether it's puts or it is call option. So let's say you got in around here, right off this bounce of the 200 EMA on the 30-minute chart, right? You
Mm-hmm.
come up, boom, you don't sell. You're like, I'm going to swing this. I'm going to hold it. I'm up. Or maybe you leave a runner or 2 runners. I can probably, I'm fairly certain that what it was here when it opened up yesterday versus when it closed yesterday, these were about the same prices per contract, even though it's about a 8-point move to the downside, just because premiums were that outrageous. It might have even been more.
Gotcha. Okay.
So when we talk about premiums, again, a lot of people trade. There's a lot of heavy volume in this, from institutional people knowing what the earnings are going to say, um, the insiders that know. So basically, why this went up is just the last 2 earnings were insanely. I don't know if you saw the last 2 earnings. It
The last
was
one I know went up, right?
No, they tanked real hard.
Oh,
Let's go to the daily. Where is it? So this is the last earnings.
mm-hmm.
Oh yeah, you're right. So here's the last earnings that went up. You're correct. And they kind of traded sideways since the previous two earnings, I guess. So a quarter or 3 quarters ago, 2 quarters ago. So it kind of looks like it found its bottom at 160. And then yes, you are correct. It did go up the last earnings. It didn't have as big of a jump as this one, but I believe this one they had a better foresight. They talked about how they're going to start charging extras on accounts for password sharing. So of course that brings in money into the. So when that happens, that brings in money into the revenue stream, right? So
Mm-hmm.
anytime a stock can make money, that's good.
Cool. Thanks for that.
What about you, Diane? You have any questions?
Well, I was been stuck on AMD for the last 2 weeks just because I'm trying to get familiar with
Okay.
trading. So I actually used the Fibonacci yesterday, but
Nice.
I realized I don't know, maybe it was just me. I got out too early before the actual move. The the candle retraced at the 61.8, and I think that's when I got out of out of the trade yesterday.
Okay.
Yeah, let's see. I
So
think it was at like 7 o'clock yesterday.
okay, yeah, I'll go over that real quick or after this.
Yeah.
So right here you see Nucor. It had a massive earnings sell-off, and I was really confused
Mm.
because that's why I say know the company's inside and out. I know Nucor very, very well. I know their CEO. I've done a lot of research on them. I know their market structure, market plan. Basically, Nucor I grew up with it in my backyard, and one of the biggest plants. So I'm from Steel Country. So I was really confused. I'm like, why is this going down? And then sure enough, they came out with record profits. So this is basically just market makers getting it in for people to get at such a low price. And then you can just see this massive from 88 to 188 within a quarter, right? So and then here they bought a bunch of stuff, they got in debt, and so it tanked back down because they bought like 2 or 3 companies within a span of 2 or 3 months. So that brought them a lot of debt. And so that scared investors away until it kind of finally settled down. But you can see here again, they had really good earnings and it came back up. So that's why it's really important to know the company and what they do. So now back to your AMD trade. You were talking about yesterday's trade.
Yeah.
So that was here. Which fibs did you use? Did you use yesterday's high and low? Where are the fibs at?
Let's see. What was yesterday? Yesterday was Tuesday.
Yeah.
Yeah, I used. Actually, I used Mondays.
Monday's high and low. Okay.
Yeah,
So if we go
those are
back today,
previous
Wednesday,
day.
Tuesday. So with this, it's Monday and high and low. You can see right here, this is kind of choppy. So is this the high
Yeah.
and low that you use? So with fibs, you definitely want to, and this is why we paper trade, so you can practice and have trial and error. This right here is going to have the fibs be such a tight window. It's really going to be difficult to be profitable because they're going to just it's going to hit each level so quick, right?
Right.
So with this being so tight of a range, what I would have done was let's look at pre-market, see what pre-market is like. So I'm always get confused. Today, yesterday, Monday. So yeah, you can see pre-market here. It had a kind of a higher run up.
Mm-hmm.
It had more. So if you wanted, you could have use this as your low and then use the pre-market high as your high. That could have been, but truthfully, because it has this huge run up, it would have been best to use used the previous day, which would have been Friday's
Reading. Okay.
fibs, because you can see how there's such a big sell-off,
Yeah.
right? So let
Yep.
me remove these. So, but you can see with me for today, what I did is I used the high, the weekly, the 5-day high and the 5-day low. So that was just, I said, okay, let me use this as there's a lot more plot points, and it kind of used, you can see right here how it is respecting the 61.8 and the 50% retracement pretty well, right?
Mhm.
So that's why I use this high and this low. But we will use the high of Friday. Is this open? Yeah, okay. So the high of Friday is 59.94. And then the low would have been the close, which is 55.84. So you can see right here, right? We have this low, but okay, this gaps up. If you didn't swing it, then now we have to turn on our pre-market data to see what we're looking like going into pre-market hours. Where from here to here, right? Yes. Okay, so we use the high of Friday and the low of Friday. Is that correct? Or is that Monday? Yeah, Friday. So you traded this on Monday, you said, right? Or you're talking about
Yeah.
or Tuesday,
Mhm.
yesterday.
Shoot. Yesterday.
Okay, so I'll go over what yesterday is as well. But so this is Monday.
Yeah, because I think Monday was kind of choppy, like
Yeah,
nothing was
it was
happening.
very
So I didn't touch it on Monday.
okay, great. So one way to trade this, you can see here we have the high and the low, right? From the previous day.
Yep.
And then we're looking and it's going into an uptrend going up, right? So this is one of the really few times that I will trade on the first 5 or 10 minute candle, because you can see we're coming in Monday as an uptrend. This is a pretty big gain from the low of 55.93 all the way up to 57. And look at this first candle. It came up, boom, it touched that 50% retracement and it traded back down. So if I wanted to take a risk and be risky, I'm like, okay, so I know, so this closed above this and I expecting a 50% retracement, right? That's what,
Yeah.
when we break the 38.2%, or if we break the 50%, we're always expecting it to retrace back down to this red line right here on my chart. So this would have been an entry. Okay, this comes down, it bounces off of VWAP, and then we can hold. Boom, I'm in the beginning, 57.2. It touches, but look how fast it just comes back down. So let's go to the 1 minute and see what it looks like on that. Where, oops, that's the daily. Okay, so I guess I don't have it set up for the 5-day 1 minute. But you can just see how fast that was before it kind of bounced down. Man, I cannot not see. Here we go. So here, boom, as soon as it touches it, I'm out. First 5 minutes, first trade. Definitely want to start the day on a good foot. Maybe I'll get out 3/5 or 75% of however many contracts I buy. That's why I always talk about trying to get 3, 5, 7 contracts. So maybe right here, I get out at 2. Now my cost is off the board, right? So now I'm just kind of trading with free money essentially. Or even with this, a premium is going to skyrocket, so I can get out with 2 and I've guaranteed myself profit. It comes back down. Where's my next stop loss level is the fib. So we come down. Yes, we kind of closed below it, but we're still early in the day. We're still holding VWAP 21 to 9. So I would have, yes, it would have kind of been a little anxious, but as long as we're holding these EMAs and the VWAP, then I'm comfortable. And then you see the next one, we go up, we touch it again. Maybe I say, okay, I'm out. Or I'll wait till the next close where but definitely as soon as we touch this, because we had this wick here and this wick here, I guarantee you I'd have been out at this, because this is even stronger of a resistance than what this is.
Yeah.
So if we had trouble breaking this, then I'm definitely getting out right here.
Right.
And then this would have been hard to trade back down just because see how these are only within 50 cents of each other.
Yeah.
So that's why you kind of need to wait for a larger ratio, not ratio, a larger spread from the trades for your fibs. Because this is I believe $4 from the high to the low, 59.94, 55. So this is $4, and you can still see how it's kind of muddled a little bit in there. So yeah, so then this trade is sideways, but I got in on this pre-market run up. So there's a lot of buying power going into the markets. It opens up. These are algorithms buying. A lot of people don't trade pre-markets. A lot of people can't trade pre-markets. So what happens? We have that running up to here. As soon as the algos are buying, people step in and they push that volume up. And then once it hits this, what happens? Algos are like, okay, I'm sitting here waiting for volume. People take the profits. Algorithms like, okay, this is a strong level, so now I'm going to sell myself, and that pushes the volume back down. And then you can just see how we kind of traded within this tight range. So this right here would have been, if I wanted to be risky, say, okay, well, we held this 50% fib, so that means that there's still some buyers. We traded sideways, so yes, I could have tried to swing it up to a $60 call. Could have tried that. But again, as I was telling T Joe beginning, it's very difficult for me. I have too much anxiety. I'm constantly looking at news overnight if I'm trying to swing trade right now. So I just stay away from it.
Right.
So now we'll go to your trade yesterday.
Yes.
So this would have been difficult trade because you can see we had that run up here. But where are we at? We are at pretty strong resistance. We're at this 100% or this high of the day is our 5. It's been some resistance for the previous 5, within the previous 5 days, even possibly before that. You can see this pre-market before we had the sell-off. And this is another thing right here. You can look at, so between Friday or the 13th through the 14th, I believe this is Thursday to Friday last week, you can see we were having a sell-off, right? So the previous day, this was our high. And then now look where we're at. We touched it, pre-market touched it, bounce came down. We opened up here, came up, we touched it again, can't break it. Where am I going to do? I'm buying puts down to where the 50% retracement, or even this golden ratio. Yeah. So come here, take profit off. If let's say I bought 5 options, put options, I take 3 out. Now I'm having 2 runners. My next stop loss will be at this 59.07 mark, which you can kind of see was a little bit of the resistance here. We can't break it. This candle doesn't even break VWAP. So you can see right here, we don't even break VWAP. Now I'm buying puts to 50% retracement. If you wanted to practice risk management, oh no, I didn't get into this candle. What happens? Buyers or sellers, people who have the put options, they're taking profit, right? Because it's algorithms are taking profit, bounces up. We can't pass the VWAP. It's strong. This right here opens up below the VWAP. Now we can expect this to go back down to the 50% retracement. So it's not as big of a move from that 59.94 down to this 58.37, but that's still right here, the premiums, because right here, if you got in after, when it's already on its way down, the premiums are going to start going up unless you got in right at that 59.94. Here, if you get in at this bounce of the VWAP, premiums are going to start reversing for call options. So the premiums will be less for puts. And that means that it's going to be a cheaper option to call. Sorry, an option to buy. So you buy your put options and you trade it back down to the retracement. Does that make sense? Are you understanding what I'm talking
Yeah.
about? Premiums and all of
Yeah.
that?
Yes.
So then even heck, you can come straight down. You say, okay, I'm going to let a runner go. This is Monday. We haven't sold Friday. So now we're going down all the way down to where our low. So that, let's say I bought 5, right? Boom, I sell 3 here, get my profit, sell 1 at the 50% retracement. I'm going to let 1 run and possibly let that runner as a swing, or if until we get to the support level. We get to the support level, the 0%, depending on the risk, depending on what size percentage gain it has. I could sell right here. And usually most of the time I will sell. Like I said, I'm going to be stressing, and then over here, I'm going to, all of this profit that you made just got lost the next day, right?
Yeah.
And so now
Mhm.
you're opening the next day with a sour taste in your mouth, and a lot of times you can try and start to chase.
Mhm.
So yeah, so that's why I always suggest buying 3, 5, 6, 7 calls at a time.
At a time. Okay.
And that's why I call smaller call outs. So if I call $80, $90, that's really about $270 that's in the trade. If you're buying 3. Whereas
Yeah.
other people that have larger, they're calling $150, $200. And I know not a lot of people have $600 to trade in one trade.
Yeah.
So
Okay.
1 second, I'm going to reply to Tanya. She said she can't make it. I'm going to see. All right, so now we have that trade in. And so we're going back to your trade. Sorry, it took a while to get there. This is the one you said you traded, right? You said yesterday, Tuesday?
Yeah. Yeah, Tuesday. Yes.
So you can see here the high and low. We haven't changed it. We have the high from, we made the high from the pre-markets to the low of on Monday, right? So if we were looking at the options yesterday, yes, of course, we could have used the high of this, but we're just practicing for pre-market sake. So we had the pre-markets here, or sorry, the high of Monday versus the low of Monday. Or is that Friday? My days are, so this is Friday's high and
I think you said
Friday's.
it was Friday. Yeah,
Yeah.
Friday.
And so we're still using those levels, right? But even if you
Mhm.
go back, these levels are the exact same. This is what the level was on Thursday. Yes, this candle broke it, but look at that wick. So that, I mean, that's just like pretty much a pump and dump. But then it trailed back up here and it touched, right? So this is a huge wick, but then it trailed back up and it touched right here, which was Friday's high as well. So essentially we're using Thursday's high and Friday's low. You can see here Thursday it had a massive run up. So there's quite a bit, and that's why I kind of like to go out a few days, because there's a lot more movement. There's a lot more buyers, sellers, volume within these levels.
Quick
So now,
question.
yes.
Is 5 days your max for the high and low, or do you use their fib high and low further back than 5 days?
For intraday,
I guess it just depends, right?
yeah. So for intraday,
Yeah.
it kind of is, just because that's how I have I don't really have like a 7-day. I could use a 10-day, 30-minute one. But
Mhm.
for really, as long as these levels stay in the trade, then
Yeah.
you could do it essentially for 2 weeks, realistically, right?
Okay.
As long as it doesn't really
Yeah.
break above this $60 and really break below the $55 mark.
Mhm.
And that's why I'm not swinging, because if I'm trying to swing out here, if I swing this a month out, I mean,
Oh, yeah.
it's really just trading sideways if you look at it within that
Yeah.
$5
Yep.
range. Yes,
Yeah.
I mean, if I was a genius and I got it here at the 54 and I swung, I mean, it would have been up a lot here. The next day it would have been down. Theta's taken a little bit away. It would have been neutral here with theta taking more money away. Would have been up here, back down, but it really would have only been within like a 2 to 5% range, depending
Mhm.
on that swing. So that's another reason why I'm really not trying to swing, because these are a lot easier trades to look at and to not have anxiety and just watch 10% here, down 4%, up 3%. So when we're going into this trade, this would have been a little bit difficult. I would have been a little hesitant to really trade this day. Make sure this is the correct day. This is Tuesday. Yeah, that was yesterday. Just for the fact that we're opening right at that 100% level. So the 5 days high. So but you can see here, we already touched it once and bounced kind of back down. But as opposed to what happened the previous Friday, it continued to have sell off going into the day, right? We had a little curl this last 15 minutes. The other day when we would have gotten the call options right off the start is because it pretty much went up for the last 30, 45 minutes into the trading day. Here, yes, you can see it opened up here right at the 100%. This probably got a lot of people in trouble if you bought at the open, just because, oh, it broke the previous 5-day high. That's why we wait for candles to close, because it touched, it came straight back down. There's really no level here. Let me see if I can put another fib level. Yeah, so the next fib level is way up here. So there's really no telling where to get in or to get out on that. So if you got in here, your premiums are out of the roof and it just comes straight back down and you're going to get stopped out pretty much immediately if you stick to your stop loss. So what happens? Okay, we come down, we close, we open. Now what happens? We come back up and then this candle wicks. If you have higher risk, then you can get in here because we're on a downward momentum. We've shown that we couldn't hold above the 100% level, which is very strong as well. We see a candle, boom, I'm getting in. My first target is here at the 61.8%.
Yeah.
Take 2, 3 off the board. Okay, we come up. Yes, I'm getting a little nervous, but what is my stop loss? My stop loss is going to be the next fib and or the VWAP. So you can see right here, amongst all of this right here, right? There is a lot of resistance. You have so yes, we did break the 9 EMA. So that's a cause of concern, sure. But we still have the VWAP we have to break. We still have the 21 EMA we have to break, right? Along with this Fibonacci level here. It is not one of the stronger ones that we have, one of the stronger two, but there's still 2 more lines of resistance that's sitting there. So we can't break it. So we see a wick here. Okay, have a little bit of relief. We try it again for the second time. Come back in. So I'm still holding. If I bought in off this first candle or the second candle to the downside, I'm still holding. But what am I doing when I see this massive drop? Once I see this, I'm looking for re-entry. Once we reject the VWAP, boom, that's my re-entry. Now I'm trying to get to that 50% retracement, which we broke right through before kind of trailing back up and trading sideways around it a little bit.
And I thought about reentry, but I just didn't because I was like, well, would I be chasing just because or just anxiety? But I didn't re-enter yesterday when I saw that pop up.
So where did you get in?
I got in at the second long candle
Right here?
right there. Yeah.
On the puts?
Yes.
Oh, so yeah, so you definitely did well. And did you take
Yeah,
profit or did you get
I did.
stopped
No,
or did you get stopped out of
no,
it?
I took profit. No, I took profit after the first candle, after the no, no, over one more, over to your right. Well, I guess
Oh,
that's my right.
this
Right.
one.
Yeah, right there. Yep.
Okay. Oh, nice.
And
So
I
you
got out.
that's a great trade. So yeah, so
Yeah.
definitely could have got this re-entry. And why? Because
Yeah.
we definitely have a doji, which is
Hmm.
saying, okay, which way is it going to go? Is it going to go up or is it going to go down? So then now we have confirmation. This next candle, the only thing is waiting for that candle to close, right? So I say,
Yep.
yes, we see this, but it closed right here. So yes, it would have definitely been difficult to get in because it would have been great to get in right here, but that's a risky entry. But since we
Yeah.
closed in, okay, now I'm going to get in this next candle. There's really no threat. It kind of comes up, but it doesn't stay up much above this 21 or 9 EMA, sorry. And then we come down before we trade back up. And so another thing is, okay, so let's say we get in right here. My stop loss is going to be where we only broke this 21 EMA for one candle throughout the previous, for the first hour of the trading session. So if I get
Mhm.
in, so let's say I didn't get in here, I waited, and then, okay, now I see it bounce off the 21, excuse me, the 9 EMA. Now I'm waiting, I get in, let's say I got in right here, right? This 9
Mhm.
EMA is going to be my stop loss. So we come down here. Yes, I'll take some profit. We're at that 50%. This actually would have been, probably wouldn't have taken profit right away just because we broke through it on this one candle. But like you did over here, I most likely would have taken profit or taken some off for the board costs or whatnot at these two candles.
Yeah.
But I'm still holding a couple of runners. It doesn't even come close to this 21, the 9 EMA. I keep saying 21. I switched my colors up and it's confusing myself, but I like the gold to be the 9 EMA because of this crossover, the
Mhm.
9 and 21 crossover. So yeah, so okay. There's really no there yes, there's two, these are two 10-minute candles, no threat about crossing the 9 EMA, come down again. Now we come up, we can't break it. So it touches here actually. But where do we go back down? We come straight back down. Okay, now I'm looking to take profit because we are already past 2 Fibs. So maybe leave one runner. And then once we broke the 9 EMA here, sell that runner to the upside. And then where we go back to the 50% retracements, bounce off of it, find momentum, and then we come back up. So, but after this trade, if I did this trade to the downside, I would have not even bothered about like I did today. I didn't bother getting back into the trade, even though I did like the setup.
Mhm.
I'm trying to stick to my goals, trying to be a good teacher, practice what I preach. So that's where we are. So I think you and Tijo both were on when I did this AMD trade, correct?
Yeah.
Yep.
Okay, so I guess I don't know if Tanya was there, so I'll go over this real quick and then we will I guess take class. I don't have no idea how long I've been on. What time is it? Oh, yeah, we got about 5 or 10 minutes left. So yeah, so again, do you want to, one of you two want to try to walk me through why I got in when I got in? Or do you just want me to go over the trade? So very similar, just kind of like what we did. We're looking, so we're having a downtrend, right? Going in to the day. So, but you can see there's a lot less volume on this pre-market than what we had previously. So it's just like, okay, what's going on? Volume's low. That's because Netflix took a lot of the volume. So when you have major moves from major companies, a lot of people are I mean, most of the trading community was looking at Netflix today, right? Tesla's earnings are today, Nucor's earnings are today. There's a lot of earnings happening. So a lot of that took the volume away from this stock. So that's kind of why you saw a little bit of chop coming here. Um, definitely sitting, staring for the first hour is not fun. First 30 minutes, I guess, and just watching it, but I usually don't get into a trade for the first 15 minutes anyway. So here I saw trailing, so I was actually looking for puts to the downside, but then we kind of reversed right at the last 10-15 minutes with a strong candle going into the opening bell. And then we came up, and then we just traded sideways. Big wicks on the top, big wicks on the bottom. And then I did get in just because I knew, okay, if we get volume coming in and we're wicking a lot from the bottom, but look right here. So we're having trouble. We're pretty much trading sideways right along all these EMAs and the VWAP. As soon as we came up, we closed above this. So this was my first confirmation. We closed above, and then we I believe I called it off of this, either called it off this candle or off of this bounce of the 9 EMA on this one. So again, let's say I called it here because we had no, I definitely would have waited for confirmation, because that I do remember it, because I thought I missed the trade going up. So when it came back down, then I called it, got in off of the bounce off this 9 EMA. So we definitely had a close here, and then okay, coming down, we're retesting a major intraday level, which is a 9 EMA. Don't even get to the 21 or the VWAP. So okay, don't break it. So get in, and then taking profits, or sorry, take cost off. So as soon as we had this huge run up premium spike, I took cost off at this 50% level, and then I just kind of waited. And as soon as we came up here, this is when I got out of the rest of the trade. I kind of mentioned it. So let me take pre-market off of here. I did make I want to call it a mistake, but I didn't make my TP3. My official TP3 wasn't the best per se, just because I had oh wow, so we changed the fibs. So these are definitely different fibs than what we used today. I think, okay, so yeah, so actually these fibs work out a lot better than what I used from yesterday's high to yesterday's low. So you can see here how it kind of traded within these fibs. That's why I was kind of confused. So let me go ahead and change these fib levels out. And so that's why it's definitely trial or error. You can see that the fibs from previous work just as well. The 50% fib kind of is a little bit different, but you can still see it bounced off right here. But for today's trade, I will go with the fibs that I use. So I used yesterday's high, which is 60.49, and yesterday's low, which is 56.4. And then we can see here. So we broke right through. So okay, I guess this change. Oh, so so the with intraday or the pre-market data not on, you can see here we touched right here right off of the 21 EMA, came up, came back down, we did break it. So once we crossed it here to the upside, right there's, we closed above, this candle closed above here, came down, tested it. This kind of got a little scary, but we're still above the VWAP, so still a huge support level there. And then we just came right up, and I do believe I took some cost off here at this level, and then took profits around the 50% fib. And then I called, I'm pretty sure, let me go back. I just want to make sure I'm doing this right. There's so many fibs and so many numbers, it kind of, but I posted the trade so I can have the fibs. So okay, yeah, so I didn't use those as my fib levels. Let me see, 57.53 was. So did I use the pre-market data? Truthfully, so that's the thing is I've been looking at so much different data. Because the 50% I used during this trade was a 57.83 level. Maybe let me use. Okay, I think instead of this huge candle right here, let me see if I use that as, if not, then you can see how fibs work in different ways. 59.94. Okay. So I guess this is practice on just how you can use different. So if I used yesterday's high versus yesterday's low, this is another way we could, it would have traded out. But truthfully, I'm not sure what levels that I used. I'm trying to go back and look at my pictures, but it doesn't show the high or the low. So definitely would have taken, so this is why, okay, 58.17. That's still higher than 57. I'll just make this mark here so you can show where 57.53 was my fib. So we came up. So even if we used yesterday's high and low from the pre-markets where taking out that candle, again, that's kind of just like a pumper dump, but the real resistance level is where we touched it twice and kind of where we opened. And then we have the low there. So this is a way that we could have traded it today. All these wicks very similar, but the 21, the EMAs, that's why I leave these EMAs on. We close above, we wait for confirmation, kind of upset, possibly miss the trade, but what happens, it comes back down, it finds support at the 9 EMA, then we get in. Where's my first target, price target will be right here at this 58.17. Again, this is not how I traded it today, but just for educational purposes on if we use yesterday's high and low. And then you can see this one opened up, came above the within one candle, blew through. So this would have been difficult really to kind of try and get out just because it blew through the next. You can see our pre-market high so fast, right? Today's pre-market high just kind of blew right through that. But again, this is kind of where I said this is why I had my PT3 at 57.13 is because I use this candle right here as opposed to the one that's in front of it later on to the day that used it as resistance. So this should have become my new resistance point, which was this 59.07, and we got within 3 cents of that today. And then of course I said it, once we bounce down, come back down, trade back down to the level. I really wish I knew what the highs and lows were on this just because it played out pretty perfectly. I think, was it the 5-day, 5 minutes? The 5-day high, that's what I had it at before. 60.49. And 54.57. I've already tried that one. Okay, here we go. That looks 57.50. All right, so these are the levels I had. So I'm not going to explain it again, but again, 50% retracement. This is on the 5-day highs and lows. And this is why you take these targets with a grain of salt, just because depending on if I used yesterday's pre-market resistance and yesterday's low versus the 5-day actual high and 5-day low. Again, I could have brought this back down So it just kind of depends, but these are the levels that I use today while trading. We had that doji right off that 50%, came back up, but we couldn't break the 200 EM. Let me take off the extended hours. We traded back down, had the doji right off of the 50%, take your profits to the downside, and then you can see where we're starting to wick here again at the top before we change into a neutral position where we're trading sideways. And then these 3 wicks, this would have been another entry down to the downside. So sorry if that was confusing for y'all, but you saw 3 different setups for how to trade today, whether you use pre-market high and lows, whether you use the 5-day highs and lows, whether you used the same that highs and lows that we had for Diane's trade, geo trades. So yeah, hope you all aren't very confused right now. Does that make sense?
No, I'm okay. Yeah,
Mhm.
it makes sense.
Okay. I just know that if someone that is new to this, or this was like a Sunday, your very first meeting, you would have been like, what is he talking about? Why are all these numbers different? But that's what happens when you continue to trade and you move around and you play. And that's what I did once like I said, took quite a bit of losses at the first quarter. So I just took a break, said, okay, I want to pause, step back, see what I'm doing wrong. And then boom, just started messing with different Fibonacci levels, different time frames, different highs and lows. Do I include wicks? Do I not include wicks? Do I use after hour data and pre-market data? Do I only use pre-market data? So this is here. TD Ameritrade's great. So you're able to just sit around and move around and see exactly how these levels kind of work depending on your trading style. And maybe you don't have access to pre-market data because you're at work or something. So then you need to adjust it. But there's, again, that's the beauty about trading. There's no one way to win. There's no one way to have winning trades. There's no one way to have losing trades. Pretty much if you can stick to your goals, stick to your trades, your stop losses, and be confident in your trades, you will be profitable in the end. Because this right here, I didn't even calculate it, but this from this entry up to here was about a 60 to 70% trade. So I'm assuming this right here, if you got in, would have been the same 60 or 70% as well. If not more, because premiums would have been lower. So if you don't have any more questions, T-Joe, did you want me to go over any chart requests before I head off of here?
I am swinging XOM.
Okay. Not a bad swing. Let's see what we're doing in the extended hours. So looking like after hours is doing decent. That is definitely a Jack, one of Jack's trades. Really, that's another thing is, who knows? I mean, tomorrow morning at 8 o'clock, the OPEC can say, hey, we're putting barrels back in, or the US strikes a deal, or whoever, and they say we're putting barrels back into consumption, right? That's gonna dilute the market, essentially more supply, so less demand essentially, and that's gonna bring the share price down. But for the meantime, this is a great trade. Did you get in it today, or did you swing it from yesterday?
I got in today around, I think I'm gonna say the second or third candle on the 5-minute.
Nice. So let's go to the 5-minute. So I mean, yeah, you can just see how volatile it is. So if you got in today, oh nice. So you got in off of the dip, right around, or did you?
No, I got in early, so I got it right
Oh,
here.
you got it.
Yeah.
Okay. So another thing, another strategy, depending, okay, so it still held this when you entered it, did you enter it as a swing? Or did you
Nope.
try to? Okay,
Nope.
so just because it kind of bounced up.
Yep.
So another thing, what you can do is, since you see that it held right here, right? It came down and it held the 9 EMA
Mm-hmm.
and it came back up, and then we kind of traded sideways at the VWAP. One thing is you can average down. It adds a lot more risk to your trade, but it's still early, right? And we saw that there's a huge influx of buyers. Well, what's going to happen when we have this huge 5-10 minute candle? People are going to start taking profits, correct? So when you take into consideration that this could potentially just be profit taking, and then there's going to be more buyers step in around the 9 EMA, because this would have been a great re-entry point for people who didn't get in. So when we talk about re-entries, we usually talk about re-entries right around the 9 EMA, which is what we showed earlier on one of the charts on SPY, I believe. So you could have tried to average down a little bit. Yes, it's scary because it came up, but if you average down, let's say you just got one extra contract, depending on the size of your contracts, you average down and then you come back up. But the thing is make sure you take your risk off the board. So if you average down here, once it comes back up to the initial price of what I bought it at, I'm selling that contract immediately. Just so now I technically have a better fill. Does that make sense?
Yeah.
So when you're taking into consideration, okay, we have 2 5-10 minute candles, 2 5-minute candles that rocket up, people taking profits. We're holding the 9 EMA. Okay, I'm going to average down, and then we come up, kind of trade sideways. This could have been a little scary, but again, with that, you need to have a tighter stop loss as well. So if you have a 20% stop loss, when you average down, make that as like a 10% or 12%. And so here you're fine. And then what happens right here, once you get up to this area, the premiums are going to start going up just because buyers are going to start coming in. And then when you do that, you sell that one contract that you average down with. So now your average per contract is a lot lower than what it was when you bought it up here with the high premium.
Yep, that makes sense.
So another strategy, more riskier, but if you're going to swing it anyways, you definitely want to try to take some of that theta burn away.
Gotcha. I have to work on it.
So yeah, so that's the glory of paper trading. You're not sweating your hard-earned dollars overnight. So awesome. Well, I hope you all enjoyed this session and took something away. I always want you all to take at least one thing away from each session. And 6 o'clock is better, or this time, is that the best for you two?
Yeah, 6 works for me.
Okay.
Yeah,
So
same.
I will see y'all next Wednesday then around this time. And again, my DMs are open. I think Diane, we were able to go over your trades a little bit. I hope that makes more sense on how to fill out the Excel. And yeah, if you have any questions, feel free. I prefer you message in the small account challenge October tab, just because that will help the other two people that are in this as well. So they might have the same question, or they might not have ever thought of that question before. So they'll be able to get the information themselves also.
Okay.
All right. Well, I hope you all have a great rest of your evening.
You too.
Same to you.
Bye.
Bye.
Bye.